What's good, y'all? My name is Marc. I'm a financial wellness board member at National Debt Relief. I spent over a decade working in the financial services industry as a licensed stockbroker and a licensed financial advisor. But these days, I make money make sense for you, so you can finally feel in control of your finances. Now, why would I do that? Because I've been there before. Even while working at these Wall Street firms and making good money and helping others with their investments, I was drowning in debt. At one point, I had over $80,000 in debt hanging over my head. It was stressful, embarrassing, and honestly, I didn't know where to turn. But guys, at a certain point, I made a decision. I got serious, I built a plan, and I dug myself out of that hole. Today, I'm proud to say I'm 100% debt-free, and I'm on a mission to help others do the same. You may have seen me featured in Time Magazine, CNBC, or Forbes, or maybe you follow me on Better Wallet, where I break down personal finance in a way that actually makes sense. Now I'm here to help you go from surviving with your money to thriving with your money. Today, we're going to talk all about personal loans, and more specifically, what people really use them for. Now, if I ask you right now, what do you think people take personal loans out for? What would you say? You'd probably say emergencies, car repairs, or medical bills. And I get it. That's what most people assume. But here's the thing. The reality might surprise you. Because when you look at the numbers, personal loans are used for a lot more than just unexpected expenses. And the most common reason might shock you. Today, I want to take you through the facts. And by the end of the video, you will have a better understanding of how Americans actually use personal loans and how you compare it to the average borrower. So whether you're thinking about getting a personal loan yourself or just curious about how other people are using them, stick around because it's going to be eye-opening. So let's get into it. First of all, let me hit y'all with a couple facts. How many Americans have personal loans, you might ask? Right now, 24.2 million Americans have personal loans, collectively owning a whopping $249 billion in personal loans. As of the third quarter of 2024, the average personal loan debt per borrower was around $11,500, which is steadily growing year after year. Not that surprising, by the way, if you factor in the relatively high inflation, of course, but still good to take note of. And now the top 3 reasons people take out personal loans, because that's why you came to this video. Am I right? Coming in at number 3, home improvements with 8.7%. Some use personal loans to upgrade their homes, whether it's a kitchen, a roof repair, or a fresh coat of paint. At number 2, credit card refinancing at 19.4%. Many people take out personal loans to pay off high interest credit cards, a powerful way to make credit card repayments a tad more manageable. And coming in at first place, debt consolidation with a whopping 50.7%. Over half of all borrowers use personal loans to combine multiple debts into one, often at a lower interest rate. The fact that more than half of all personal loans are used to consolidate debt might have shocked you, but this isn't surprising at all if we take a look at the numbers. The average personal loan interest rate is around 12.38%. Now compare that to the average credit card interest rate, which is around 21.76%. That means that the average credit card has almost double the interest rate of the average personal loan. And this is exactly why so many people use personal loans to pay off credit cards. It's all about saving money on interest. If you got high interest debt, like with credit cards charging 20% interest or even more, a personal loan with a lower interest rate can help you pay off more of that debt faster while saving you money in the long run. So let's break it down with an easy example. Imagine you owe $10,000 on a credit card with a 20% interest rate, and you're making fixed monthly payments of $200. Scenario number 1, you pay off the credit card directly. It would take you 109 months, a little over 9 years, to pay off that balance. Over that time, you would pay $11,680 in interest alone, more than the original debt itself. Now in scenario number 2, you use a personal loan at a 10% interest rate, the balance of which you will use to repay the credit card in full first. After that, you'll make the same $200 monthly payment to repay back the personal loan. If you take this route, you'd be debt-free in 65 months, a little over 5 years, and you'll pay only $2,990 in total interest. And trust me, I know $3,000 isn't a small amount of interest, but it's substantially less than the alternative. So let's break down the difference. You'll be debt-free 44 months sooner, almost 4 years earlier, and you save $8,690 in interest payments if you go the personal loan route. And that's exactly why people use personal loans to consolidate credit card debt. The lower interest rate helps you pay off your debt faster while saving thousands of dollars in interest. There lies the power of consolidating consolidating debt with a personal loan, it can simplify your payments, lower your interest, and help you get out of debt faster. Now let's talk a little bit more about interest and the different types of interest specifically, because understanding how it all works can save you thousands of dollars in the long run. What you want to take note of here is the difference between fixed and variable interest rates. Most personal loans have fixed interest rates, meaning your rate stays the same over the life of the loan. That's great because it makes your monthly payments predictable. Credit cards, on the other hand, often offer what they call variable interest rates. This means that they can decrease over time or increase over time, which if it increases, it makes it harder to pay down your balance in full. Again, another reason why people roll over their credit card balances into a personal loan is that it locks in a lower fixed rate and they can start making real progress towards becoming debt-free. It also makes your monthly payment predictable and can save you money over the long run. Okay, I get it. You want to know more about how debt consolidation works precisely. Again, let's use the example of credit card debt. Let's say, for example, you're carrying balances on multiple different credit cards, all with different interest rates and due dates. It can feel like you're juggling a million different payments all at once. Debt consolidation aims to simplify that by combining all of your debts into one loan with one payment, usually with a lower interest rate. Lower interest means that you pay less over time. One fixed monthly payment is easier to manage. A clear repayment timeline keeps you on track. This could sound a bit overwhelming and hard to do yourself, and I totally get that. Luckily, there are plenty of debt relief companies out there who have in-house debt experts who can help you start your journey towards becoming debt-free. All right, y'all, now you know the truth about personal loans. And you've learned that more than half of all personal loans are used to consolidate debt. How do you compare to the average US citizen when it comes to personal loans? And have you ever considered using a personal loan to help you get rid of your credit card debt? This could be a powerful tool to help you get rid of that debt burden that you have currently. But most importantly, know that your debt balance doesn't have to define you. Everyone has a different financial situation, and there's always a way out of debt, with or without the help of a debt expert. If you're in debt and feel like you're struggling to stay afloat, just know that you're not alone and you don't have to figure it out by yourself. If you're struggling with debt and you're actively looking for a solution, debt relief companies like National Debt Relief, which specialize in debt consolidation and relief programs, can help you in your journey of becoming debt-free. If you have any questions, we're like a free, no obligation debt relief consultation call with them. Visit their website at nationaldebtrelief.com. If you happen to have any other question regarding any other financial related topic, check out the other videos in the series on National Debt Relief's YouTube channel. It's our goal to make very complex financial concepts that you hear every single day. We want to make them easy so you can transform your financial life. Thanks for watching. We'll see you on the next video.